Hello, everybody. Welcome to the Trading with Ashley show. Whoa, what a crazy day it was in the market. Now, it was all based on fake news, but let's look at what happened. The QQQ, the NASDAQ, went from a low of 402 today all the way up to 443. Now, it quickly retreated when it was very rapidly confirmed that it was fake news about the tariffs, which, by the way, makes me realize that the powers that be are not quite ready for the stock market to recover just yet. I think it's all part of a master plan that you and I have very little visibility to. But with that being said, when it's time, once the pain is over, it is going to be an amazing rally, and I do not want any of you to miss out on that. So how do you do it? How do you play it? Well, in my perspective, you use this volatility to your benefit. Let's look at the background with volatility in the markets. If you look back over time, every time that the VIX has hit 40, that's very high. We actually hit 50 here recently, but every time that it's hit 40, when you look 1 year later, 96% of the time the market's up, and it's not just up by a little. It's usually up by anywhere between 35 and 40%. What a recovery that will be. So how can we make money in the interim on this elevated VIX? Well, it all has to do with the premiums that I keep teaching all of you about selling options. And what we're doing in my community is we're going really far out in time. We're going out to December. We could actually go further out if we needed to. And we're selecting strike prices that are super low. And that's helping us a lot because we are lowering the capital requirements to buy 100 shares when we're pulling down that strike price. And we're able to go lower because the premiums are just so incredible. So to give you an example, today I called a play where we were saying we would buy the QQQ at $250 a share if it got down that low. And for that, we were paid handsomely. In fact, we made almost $5,000 in premiums. We collected premiums today up to around $5,000. Now, we will in turn buy all of these contracts back well before their expiration date. So we won't keep all of that $5,000 because we're going to use some of it to buy the contracts back. But one contract today, we took the play in the morning, and within 2 hours, it was at a 25% return, meaning we could keep 25% of the premium that we collected, even though this particular option did not expire until the end of this year. But that's what happens with volatility. And so what we're doing in my community is we are stacking wins, everyone we can find. And then when the dust settles and we get a green light to move forward in the market, everything is going to add to those dollars that we're stacking now. So that's the beauty of what we're doing. And we have some members that are thriving. They had recently joined and they had not known how to trade, and they are finding quick wins and quick wins fast. Now, not everyone's winning. Those of us that have been doing this for a while, some of the plays that we were put the shares on, well, those are still down, and we need to wait for recovery until those shares are now at a spot where we can start selling covered calls. Now, I don't like selling covered calls below the strike that I got a stock at. And the reason I don't like doing that is in big part because what happened today when we saw the market start dramatically climbing back, thinking that the worst was over, had we had covered calls sold on some of our positions, it would have blown through our strike prices. And that's okay if the shares are called away, but a lot of our positions aren't quite there yet. So I want you to really consider hard if you want to try to make a little bit of money on covered call premiums when you are below the strike that you actually got your shares at. I think it's very important. I worked with a lot of people today that were just really hungry to sell covered calls, but I pointed out that their particular stock was below the Bollinger Band. The RSI was under 30. That's a really dangerous time to lock yourself into limited gains. So you need to be really careful about that and be patient with those plays. But if you have a little bit of cash on the side, why not sell some puts, very low puts, where you wouldn't mind getting assigned to these shares when they are significantly lower than where they are now, and take advantage of that high premium while you can, because it won't always be this way. Once things normalize, that VIX retreats back below 20, You're still going to have some great plays. That will be when our positions that we already have start carrying us higher in our portfolio. But the days of being able to get this much for this little of capital, that won't always be the case. So we are milking that for all it's worth. Now, when you're a trader like we are, you have to be nimble. You have to look at alternative ways that you can make money from the market. Because when you are in the days of wine and roses, it's pretty easy. You can use your technicals, you can use your fundamentals, and you can make really good money on plays. But when all hell breaks loose and you have the market being manipulated like it is now, technicals really kind of go out the window. So you really can't use that as your guiding light for most of your plays. But that's okay. We're nimble. We're able to adjust accordingly, and we're able to make good money. But the biggest purpose of this video is to tell you, don't be so afraid of the market that when these buying opportunities happen your way, you don't take advantage of it. There's nothing wrong with saying, I'm waiting on leaps because the VIX is high and I'm just not sure I'm catching the bottom and I'm not willing to take something that's not at the bottom. Okay, that's no problem. You don't have to take leaps now, but there's nothing wrong with starting to buy some of your favorite stocks. Nvidia under $100. Do you think in 2 years from now you're going to be kicking yourself if you didn't start to get into that position? You have Palantir that's pulling back to levels that it just wasn't thought that we would even see. You have some really great opportunities going on right now. Google, another good one. Amazon, another great one. Wonderful companies that in the future, once you're in the green, that covered call premium is going to be really good and you're going to love the amount of income that you are able to create. So whether you're an investor or a trader, right now is the time to start setting everything up. So what do? Do your homework right now. Study the stocks that you've always wanted more exposure to and make yourself a list. And then when we have a big red pullback day, and remember, more will come, then go shopping for those stocks. And then you're setting yourself up for an incredible opportunity to sell covered calls in the future. It's the wheel strategy. So we're doing one part of it right now, and that is we are gaining premium from selling puts. Those premiums, if it doesn't hit our strike price, those premiums can be used to buy the stock. So on a day like today, when we had a whipsaw down early, we sold significant premium. Now, as it pulls up, we will more than likely go ahead and buy those contracts back. That's giving us the base, the cash. Then our next red day, we could sell more premium, but take that extra cash and start establishing some of our positions at these incredible prices. Then when the dust settles, when everything starts riding high again, you can bet we are going to have ample opportunity to start selling covered calls because we are getting these stocks or ETFs so very low. My favorite, it's still the QQQ. I love what I think that will do for me in the future, and I am starting to reestablish some of my positions. I did put stop losses on a lot of my positions when I took them out. Didn't take all of them out. I wanted to see what would happen if I went ahead and left some of them on, and I saw today when they're ready to come back, they're going to come back roaring. Now, for those of you that are trying to figure out, okay, what do I do with my leads? Do I actually keep it? Does it have a chance for recovery? I did a great video last night and I want you to watch it because it actually takes you through an option calculator and shows you how to assess what might happen in the coming weeks and months. And that will help you make a better decision on if you go ahead and get out now or if you hold tight looking like there is a chance of recovery. So I want you to have all the tools you need. Hey, once we get through this crazy time together, it's smooth sailing. Remember, when you're with me, Trading with Ashley, there is no trader left behind. And here's that video, I promise.